If you want to spend your Bitcoin and give up ownership, that's your choice. It's a free market. You can do that. But in my experience, it's better to borrow inflating fiat currency units that lose purchasing power over time against pristine collateral that's been engineered to accrue value over time.
Maybe it's not a Mad Max scenario. Hopefully we have broad enough Bitcoin adoption, but where you don't need one global government to operate on a Bitcoin standard, because it is global, digital, decentralized currency that anyone could use.
So humans, for thousands of years, we just used what we could, but we never had engineered a solution to solve the money problem.
They're either buying from retail or they're printing new currency units to buy Bitcoin. Whatever they're doing to accumulate Bitcoin, to me, is some form of theft.
Bitcoiners in the future will be widely known as the true risk-free borrowers, and Bitcoin-powered financial products will be known as the true risk-free rate of return. And all of that starts with what we see happening here at People's Reserve, financial engineering for retail through the different products we've been working on and are excited to bring to market.
Hey everyone, Michael here with the Bitcoin Way podcast. Thank you for tuning in. Today on the show, I have CJ Constantinos of People's Reserve. CJ is an awesome guy building some very interesting products. There's way more in the pipeline than I even realized coming into this conversation. We discuss the details of the People's Reserve. We also kick it off with just my understanding of his base case for Bitcoin. His thesis differs from mine in many ways, but seems to be just a really solid guy trying to do his best to bring opportunity and resources for the people. And we talked offline afterwards about some other exciting things that he has going on. So definitely someone worth paying attention to. I really hope you enjoy this conversation with CJ. Alrighty, everyone. Like I said in the intro, I've got CJ with me today. CJ, welcome to the Bitcoin Way podcast.
Thanks so much for having me. I know it's my first time here. It's good to be here.
Yeah, I'm looking forward to this conversation. You're doing some really interesting stuff. I told you before we hit record, I want to start, though, with sort of your base case for Bitcoin. There is a lot of talk about Bitcoin as fundamentally a store of value. Many of us promote it as both a store of value and fundamentally as a medium of exchange. And I think maybe that'll set the stage for how people view the work you're doing with People's Reserve. And maybe just how you see Bitcoin more generally, taking up mind share in the financial space over the next, 5, 10, 20 years. So to you, is it a medium of exchange? Is it a store of value? Is it both? Is it a lot of everything? And how do you see this playing out over time?
Yeah, great question and a great place to start. For me, I call Bitcoin engineered money because it's the evolution from the natural to the human design. So we think about, we used to harness fire and then we went to electricity. We used to utilize the horses and we made the engine. Now we have horsepower. And we used to write things down in print. Now we have strings of code to show it on our devices. So we go from like the natural to the engineered. And I think of Bitcoin as the engineered money, with the natural form being sound money like gold and silver. So I think gold is a great way to start to understand some of the characteristics of money. And we can see that the characteristics that gold was able to hold over the time made it a good store of value and made it a way to for people to use it for savings and even as a medium of exchange. Of course, it ran into medium of exchange problems, sort of like Bitcoin. It's interesting that gold needed an L2 to increase monetary velocity, and we got that in paper derivative notes. And Bitcoin today, although it is a successful layer 0 settlement layer, it needs something to help increase velocity, right? You can't buy your $7 coffee and pay $20, $30 fees to make that happen. And today, the mempool is pretty empty, so you can send transactions for less than $1. But when things get busy and global adoption picks up and you have to bid for that block space, then the velocity will become an issue like it did with gold. So we called Bitcoin digital gold because it makes all of those things better that gold did in a natural way. And that engineering kind of just sets it apart, makes it the first of its kind. I say Bitcoin is our first discovery of money. So humans, for thousands of years, we just used what we could, but we never had engineered a solution to solve the money problem. And the money problem is a really big problem. If you look at the world today, most of the issues that we have in the world today uh, are from money. I mean, the Bible itself says the love of money is the root of all evil. So that evil has infiltrated into monetary systems and has very evidently presented itself through society and culture. And we're moving backwards as humans because we have a problem with our money and we haven't fixed it. And now that we have Bitcoin, we have the solution. And the 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 wall of understanding, the barrier to entry for most, I think, is that, well, they look at Bitcoin, they say, well, is it a store of value? Is it a medium of exchange? Is it a unit of account? And if it's not those three things, well, then it's not money. But the thing is, when we started early in Bitcoin, when I started in Bitcoin, it was magic internet money. Like nobody knew what this thing was going to be. It wasn't until later on that the narrative switched to digital gold when it started becoming a store of value, and people understood how the design of Bitcoin through proof of work and the difficulty adjustment would drive value into the into the digital asset itself through the expansion of the network, kind of the self-regulating code. I like to call the difficulty adjustment the central bank of Bitcoin because when the price goes up, market gets too hot, hash rate grows, difficulty goes up. Apparently, that the miners like profit, right? Who would have thought miners like the profit? So when it becomes unprofitable to mine, then the hash rate will slow down. And when hash rate starts to slow down, you start to understand that the value proposition of Bitcoin is getting a little bit ahead of itself relative to what the market assigns that value to. And in a world of lies, a money ledger that demands truth turns out to be quite valuable, which is why Bitcoin continues to perform over time. So from a high level thing, we have this evolution from the natural to the engineered, and then we go down one step deeper and we say, okay, what does that really mean? We're switching from natural money to engineered money. How does this affect me? Well, in my opinion, moving from digital gold to pristine collateral is the evolution that we're all watching happen right now in the marketplace. Bitcoin is digital gold, but when you create products, financial products like we have at People's Reserve and that you see in the marketplace that allow you to borrow against your Bitcoin and allow you to access that trapped equity without tax obligations or without having to give up ownership of the Bitcoin, much like how Elon Musk borrowed some funds against his Tesla stock to help fund the purchase of Twitter. Being able to tap into that equity without giving up ownership is part of the maturation of an asset class going through monetization and financialization. And we've seen that with real estate. So I tapped on gold, and now let's tap on real estate because Bitcoin is this amazing hybrid that kind of brings all these different characteristics of different asset classes together. And when they took gold off of the dollar in 71, real estate really started to move forward aggressively, not only because of the dilution of currency units and forcing the prices up, but also because of the financial products that were built around real estate, like mortgages and home equity lines of credit, and being able to collateralize your home and use financial leverage with that asset. That is what we're seeing here today. The next big move is, do we have the store of value? Is it digital gold? Yes, absolutely. Do we have is it a medium exchange? Yes, but is it a high velocity medium of exchange? No. Okay, how do we get past that barrier? Financialization. Because the best way to spend your Bitcoin is borrowed dollars. Now that might rub a few people the wrong way, but if you want to spend your Bitcoin and give up ownership, that's your choice. It's a free market. You can do that. But in my experience, it's better to borrow inflating fiat currency units that lose purchasing power over time against pristine collateral that's been engineered to accrue value over time. And what happens is Bitcoin yield is not earned by giving your Bitcoin to somebody else and introducing counterparty risk. Bitcoin yield is actually paid in the form of the reduced burden of the debt over time. In other words, if you post $100,000 worth of Bitcoin, you borrow 50K, a year and a half or 2 years later, the Bitcoin's worth 200,000. Well, your debt ratio of 50 against 100 is much smaller when it's 50 against 200. So the burden of the debt shrinks over time through the engineered design of the collateral. And if people can kind of let that light bulb go off, dollars become the solution to how you spend your Bitcoin. You borrow your dollars against your Bitcoin, and now you're spending the equity of your Bitcoin without giving up ownership. And dollars are able to move extremely fast. Dollars are a really effective way to spend Bitcoin because you can spend them all over the world. And Lightning is an effective way to spend Bitcoin. There's going to be other effective ways to spend Bitcoin. There should be multiple solutions in a free market. But in my opinion, borrowed dollars seem to be the obvious answer of how we increase Bitcoin velocity and financialization and products that we build at People's Reserve that allow the people to leverage their Bitcoin are what drive us into the next stage of Bitcoin, which is becoming that well-known medium of exchange. And once we get the medium of exchange, unit of account. That's the final thing. All three things will fit. And so just one last thing I'll add to this,
Yeah, yeah,
and
yeah.
thank you for letting me go on
Oh,
here.
no, no, no.
I
This is
have a bad habit of doing that. But what happens is once you get medium of exchange, adoption accelerates significantly, and it just naturally becomes a unit of account. You don't have to earn your way into unit of account. People start to think in terms of Bitcoin. They start to price things in terms of Bitcoin. They start to understand, oh man, I shouldn't have bought my single family starter home for 100 Bitcoin because today it's worth less than 10. So what the heck did I do to myself? And the light bulbs go off. It starts to click. And once we have all three of those things, I think we go from where we are now to the price of a single family home and then to parity with gold.
So, okay, so no, that's an interesting thesis. So, a lot of ways I could take the questioning here. So, one question I guess is, it sounds to me like you do see a future, perhaps some ways down the road, where Bitcoin is perhaps ubiquitous as a medium of exchange. People are buying groceries anything in Bitcoin today. Obviously, that's not the case, and you seek to solve an immediate problem that people have, leveraging Bitcoin as collateral, so they don't have to sell it, they don't have to experience, the tax event. Is there an expiration date on that thesis in your mind, though? Because it seems at some point, if Bitcoin is ubiquitous as a medium of exchange, if certainly if we've reached the point where it's a unit of account, um, you know, posting your Bitcoin as collateral isn't the play. It's spending your Bitcoin, and you're probably being paid in Bitcoin at that point in time, and so it's sort of a more natural, or is your thesis? Well, no, the dollar is going to live on for a long, 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 long time, and we're just going to coexist in this fiat system to some extent.
Yeah, so I think the flaw in the understanding that everything will be uh, Bitcoin only, what it does is it applies Bitcoin to a global economy. So if we had a one world economy with one global ruler and one set of laws, then I think that thesis would be correct and mine would be invalid because then Bitcoin could measure the global economy all at once, and those economies could be priced in Bitcoin. But instead of those economies being directly priced in Bitcoin, there needs to be a medium that helps separate these actual economies. So, why is the United States different than China? Why is Australia different than Europe or UK? And then how do we put a price on that difference? If 1 inch is 1 inch in the United States and 1 inch is 1 inch in Japan and Australia and UK, well, then one Bitcoin should be one Bitcoin in the United States and Australia and UK. So then how do you measure an economy against that? With the fiat currency. It's the purchasing power of the economy's fiat currency that is the added variable that then allows Bitcoin to actually price the economy. So as fiat currencies get weaker and weaker and weaker against Bitcoin, for instance, not that long ago, the Egyptian currency completely, I mean, there was a big blow up in the Egyptian currency. And I think the price of Bitcoin went up to like a million fiat currency units from the government of Egypt because of mistakes that they made. But it didn't go to $1 million. So how can you measure the value in the difference of the Egyptian economy and their monetary policies versus the US economy and their monetary policies? Fiat currency. And since governments, I don't think anytime soon are going to stop issuing debt or printing their own currencies, it seems to be a happy medium where you can have Bitcoin as the universal layer zero, and then to analyze an economy against the value of Bitcoin, you apply the purchasing power of their fiat currency unit. And then you can get an understanding of this economy is growing, this economy is shrinking, this economy is strong, this economy is weak. The fiat currency becomes the way you measure the strength of an economy, whether it's growing or contracting, against the global settlement layer of Bitcoin. And that settlement layer used to be gold. And the economies what happened, the governments, they printed too much money, especially the United States. some other market participants called their bluff, started borrowing dollars to trade them in to get the gold back. There were more dollars than there were dollar liabilities than there were gold assets. So they had to remove the backing or there'd be no gold left and it would be revealed that there was no assets backing the liabilities. After they remove gold, it's just backed by debt derivatives, right? So equity or proof of work, even in mining gold and pulling it out of the ground, was replaced with proof of promise. So I don't see that proof of promise just disappearing unless we have some kind of Mad Max apocalyptic scenario, which I'm sure nobody is really too interested in that scenario. I mean, I have kids. I have my fourth kid coming, so I'm not interested in fighting a war or having to give up a vast majority of the value that I give to the economy and spend my earnings on security to protect my family because culture and society has completely broken down and systems have completely broken down. Can it happen? Absolutely. Does it need to happen? No. Because if you have Bitcoin, you're automatically protected through all of that. If you use Bitcoin as your savings vehicle, it doesn't matter the growth of the US economy or the contraction of the economy or whatever country you live in. The economy doesn't matter because you're saving in Bitcoin, and Bitcoin is part of the internet economy. The internet economy is the only free market economy in the world. No one country or government can control the economy. It's the only economy in the world with free market interest rates, and the reserve asset of the free market economy is Bitcoin. So when you save in Bitcoin, you're making a bet on the internet economy. When you save in dollars, you're betting on the US economy. When you save in any other fiat currency, you're betting on the economy of the issuer of that currency. That's why if you live in that area with that currency, you work, you get paid in that currency, you immediately put it into Bitcoin as your savings, and then you only keep what you need to spend and pay your monthly expenses. You don't try to save in it. You can't. You don't want to make a bet on your economy because governments are deficit spending, and if they stop deficit spending or creating inflation, then the economy will evaporate. It's completely dependent upon the handouts from the government. It's completely dependent upon government spending. So you don't want to bet on that economy. You want to bet on a decentralized economy. You want to bet on an economy that has free market principles and a reserve asset like Bitcoin that cannot be manipulated and cannot be diluted. But we still have a place for those fiat currencies. There's still a reason for those fiat currencies to exist, which is to understand which geographic areas have pros and cons to their economies and how those economies run and operate relative to the other economies in the world. So unless we have a one world government where everybody comes together and we have one set of rules and regulations, laws for everybody, then I don't think Bitcoin is like the only thing that is used. And as long as countries want to issue debt and measure their economy against another economy and that level of competitiveness in the free market pushes forward, well, then I think there's a place for both of them. And people who hold Bitcoin are going to be in the power position because no one economy is going to be able to outcompete or outperform the aggregate of the internet economy.
Okay, so maybe where you and I disagree is on it, in terms of like the continuation of fiat currencies. Then is um, sort of the inevitability. I tend to assume, and I have no real timeline on this, and maybe it's a timeline issue, but that fiat currencies do begin to collapse in meaningful ways, and maybe it's not a Mad Max scenario. Hopefully, we have broad enough Bitcoin adoption, but where you don't need one global government to operate on a Bitcoin standard because it is global, digital, decentralized currency that anyone could use. And I think because of like Saifedean's gunpowder analogy, game theory would suggest that if 10 countries adopt it, certainly meaningful countries, other countries will be forced to adopt it because why would you trade for a currency that could be printed if you could trade for Bitcoin? So I tend to view it as I think smaller currencies will begin to collapse, and over time we'll get probably to the United States dollar. How that happens, when that happens, I mean, it could be 20 years from now, it could be 50 years from now. Um, but it's an interesting thesis. I'm always just curious to hear like where people see this headed.
Well,
Um,
I think your
yeah.
point is valid. I think you make a strong counterpoint. But my one counterpoint to that would be that if Bitcoin is engineered money, a savings technology, a tool to accrue value through time, and governments start adding it to their balance sheet, then the perfect example is to just look at El Salvador. Nobody liked El Salvador. The credit rating agencies hated it. The banks hated it. Even the IMF hates it. But they started buying Bitcoin. And when they started adding Bitcoin to their balance sheet, something happened. El Salvadorian bonds, traditional TradFi bonds, fiat currency debt derivative notes started to perform better than any other debt derivative in the world. So why was El Salvador's bond performing so well? Why was their debt derivative fiat currency strong? Well, because they put Bitcoin on the balance sheet. So when countries put Bitcoin on the balance sheet, and you see the United States through Trump's executive order creating the strategic Bitcoin reserve, and hopefully soon here through law making the strategic Bitcoin reserve, um, part of the law, that's not just an executive order that can be canceled by another president, but codifying it through legislation. When they start adding Bitcoin to their balance sheet, that actually strengthens the dollar. So I mean, think about it. If we print dollars, and the TradFi guys would say, well, we print the dollars, we spend them into the economy grows, tax revenues grow up, so government spending is healthy and it's needed, and that's how you produce uh, increased tax revenues, and this is how you grow an economy, which is absolutely false. It's how you make an economy dependent. However, the more that they spend into the economy, if they hold Bitcoin on their balance sheet, the more value is going to be driven into the asset side of their balance sheet. And because Bitcoin has absolute digital scarcity, there's 21 million, there will never be any more. That supply demand dynamic says that as those fiat currency units expand, the ones that you have on the asset side of your balance sheet, the growth of the asset side of your balance sheet will actually start to outpace the growth of the liability side. And that's our biggest problem right now in the United States. We borrow a dollar, we owe $1.04 or $1.04.5 for every dollar we borrow. We spend it into the economy, and we're getting like 20 and 30 cents of return on that through economic growth and increased tax revenues. So we're borrowing $1.04, we're getting back 30 cents. We can't even pay back principal. Forget about paying principal plus interest. That creates the inflation problem. However, if you're spending that money into the economy, and as you're weakening your currency to boost infrastructure investments, onshore manufacturing, and all the other things you have in the budget, the value of the Bitcoin goes up on the asset side. And Bitcoin's absolute digital scarcity makes the asset side actually grow faster than the liability side. Right now, the liability side grows much faster than the asset side, which is why our debt to GDP ratio is not that good. But if you add Bitcoin to the balance sheet, it's actually going to make your debt to GDP ratio stronger. We'll start to see that come back down to healthier levels, because that's what Bitcoin was designed to do, to accrue value over time. So combining those two is kind of like the wrench, or the curveball, or whatever lingo you want to use to explain if it's one or the other. Yeah, but now that governments aren't fighting Bitcoin and they're adopting it, it actually strengthens their financial position, which actually increases their ability to issue fiat currency units. It's an interesting relationship.
Yeah, I think that's what concerns me. Like
Mhm.
I'm a to anyone listening, they know I'm a known critic of strategic reserves. I mean, for a few reasons. I mean, first of all, I just don't like the government being strengthened in any way. But second, they're either buying from retail or they're printing new currency units to buy whatever they're doing to accumulate Bitcoin. To me, is some form of theft, and I don't like that. I would rather this be a people's movement, grassroots, ground up. But man, we could talk about this forever. I want to hear about People's Reserve. Why don't you explain what it is, how it works? Oh, and what gave you the idea? Like, what was the inspiration behind this?
Yeah, the inspiration is from my own mistakes. I ended up buying my single family home for 100 Bitcoin, and I'm getting crushed. There's no chance I will ever recover that Bitcoin. I'd be 8, 9, actually, I'd probably be $10 million richer today if I didn't spend that Bitcoin on my single family home. Now, that's not to say it wasn't worth it. A home is part of the hierarchy of needs, and over those years, the memories and experiences that I had with my wife and my children and my family for holidays and birthdays, and it was worth every single penny, every single Bitcoin that I spent on it, and I wouldn't take it back. So it but it did highlight a problem, which is, man, if I didn't have to sell my Bitcoin to buy my home, and I had the proper tools that could help me unlock that trapped equity in Bitcoin to buy the home, then I would have paid that debt off. I would still own my Bitcoin, and I'd own the home. So this is crazy. This is a big problem. Like, if I have this problem as a Bitcoiner, other Bitcoiners are going to have this problem too. Let's solve this problem. This is a big, important problem, because lots of Bitcoiners are going to see large amounts of increased purchasing power for being responsible savers of Bitcoin. And of course, they're going to want to purchase a property. The home is part of the hierarchy of needs. And if they have to give up ownership of their Bitcoin, then they're put in the same position that I was put in, which is you actually have to give up the upside of Bitcoin. And with Bitcoin's 10-year CAGR at 82%, the last thing you want to do in the world is let go of your Bitcoin, because nothing is going to grow faster than Bitcoin. Nothing can grow faster than Bitcoin because nothing else has absolute scarcity. Bitcoin has that absolute digital scarcity characteristic. Therefore, you always want it on your balance sheet. And if you follow Gresham's law, it's always the last money that you're going to spend. You're always going to spend your dollars and your silver and your gold. You're going to barter the things that you have sitting in your garage before you spend your Bitcoin. You spend your Bitcoin last because it's the most sound and strongest form of money. But I had to spend it to get my home. So making that mistake led to the creation of People's Reserve and a lot of the products that we have in People's Reserve, not just the Bitcoin powered mortgage, but also the cash flow products we've developed, because that's another problem for Bitcoiners. You hear it from TradFi all the time. Well, it doesn't create cash flow. Well, you definitely don't want to lend it to other people and introduce counterparty risk to generate yield with your Bitcoin. We see how that worked out over the last couple of. That is a no go. Like hard stop, not worth it, because you're getting 82% CAGR. So you're going to give up 82% CAGR. You're going to risk 82% CAGR for 4, 5, 6, 7, 8, 9, 10% yield. Doesn't make sense. The risk is not worth the reward, so you don't do it. But how do you get empowered by this amazing engineered money? Well, you post it as pristine collateral, because that's what it is. It's pristine collateral. In the financial system now, real estate is a big form of collateral. Automobiles are a big form of collateral. And U.S. treasuries or cash equivalents are a big form of collateral. And equities are a big form of collateral. Those are like the 4 biggest forms of collateral in the system. And I would say cash equivalents are the biggest foundational form of collateral in the system, but they have problems. And with gold, when gold was that collateral, when the dollars were backed by gold, you have transportation, security. I mean, sometimes it would cost more to settle the gold than it would to borrow against the interest. So the interest payment wouldn't be that much to borrow against your gold. But then when you had to settle, you have to move it across the world. You have to secure that movement. You have to guarantee that movement. You have to insure that movement. The costs to settle were ridiculous. And so they said, you know what? We have to use these cash equivalents. And now we have the T+2, T+3 structure, where you can settle, hundreds of billions of dollars and big business deals over the course of 2 or 3 days. And it made it, you could be able to do it in a cheap and easy way, because you're trading back and forth cash equivalents between trusted counterparties on a centralized system. But now that's not working, because those cash equivalents are being abused. The powers that be are expanding the supply of those cash equivalents, which gold kept them from doing, right? Gold is somewhat hard and has to be pulled out of the ground for the supply to expand. So there's a cost to expanding the supply of gold, and that limited the expansion of monetary units. But there is no cost to expanding debt notes. You can just issue them and expand them ad infinitum, and that's created a problem. And here comes Bitcoin. I call it pristine collateral because you get the best of both worlds. It's the best of gold and it's the best of treasuries or cash equivalents. With gold, you get an upgrade from hardness to absolute digital scarcity. And then from the treasury side, you get quick, cheap, easy settlement upgraded from T+2 in 3 days to 10-minute block times. So you're literally getting the best of both worlds in an engineered form of money that was just strategically designed to solve this problem, making it pristine collateral. And that's what People's Reserve does. We look at Bitcoin as pristine collateral. We treat it the way it deserves to be treated. And we look at the borrower, the responsible saver as Bitcoin, as the risk-free borrower. Just because the government has the power of the printer and is able to print more currency units and pay me back, it doesn't matter. That principle is still held in a cash equivalent over the life of the loan. If you lend, from the lender's perspective, if you lend into a real estate product like ours, it's backed by real estate and Bitcoin. So the principal value is not held in a cash equivalent that becomes diluted through the life of the loan. It's actually held in Bitcoin and real estate, which accrue value over the life of the loan. That significantly mitigates risk. That risk mitigation is actually a better form of mitigation than having a printer, because when you print, it dilutes. These don't need to be printed because they're real world assets and they're liquid, or at least with real estate, they're partially liquid. And with Bitcoin, it's perfectly liquid. So that cross collateralization in our product is really our innovation, by bringing the real world assets together with the perfect pristine collateral digital asset, creating a hybrid contract that cross-collateralizes those assets to empower we the people, to make the responsible saver have a financial instrument that lets them unlock the purchasing power of their trapped Bitcoin equity or even their home equity, and to unlock your Bitcoin equity to buy the home or unlock your home equity to establish your Bitcoin position. It works both ways. But either way, you're going to be in a better position because you're going to get the lowest interest rates because you have the most pristine collateral, and you're going to get no rehypothecation guaranteed. We don't believe in that. You get options to choose multi-sig for custody solution so that you don't have to worry about us rehypothecating when we said we're not going to rehypothecate. You always will be able to see that Bitcoin on chain with proof of reserves and going down the check mark of all the mistakes that were made in the past and making sure that these contracts protect the Bitcoiners. Because at People's Reserve, we are relationship maxis, not profit maxis. We are not going to commit usury against you and charge absurd interest rates when you are posting the most pristine form of collateral as well as real estate in an over collateralized lending solution. We're going to treat you as the risk-free borrower. And I believe what's most exciting is that free market internet economy I was talking about. These products are going to form the yield curve within the free market internet economy. And we are going to, for the first time that I can think of, actually have a reference point to a true free market yield curve to understand interest rates or the price of money. And it's only going to be found for Bitcoin, the only true free market reserve asset in the world.
So well, I appreciate your transparency with all this. Very interesting. Could you walk me through an example? Like, I mean, I'm bad at math. Maybe pick a number, a dollar value of a house, an LTV. How does it work? And then maybe even some of the mechanics in the background. Who's supplying the capital? Like, is there a partner that you're working with, like a Bitcoin friendly bank, or how does all of it sort of work together? Like, if I'm buying a house, like, give me an example of what that might look like.
Yeah, absolutely. So I think the best way to start is to say that the magic of People's Reserve is that we have subsidiaries that are LPs, but we've also sourced other LPs that look at the market differently. So if you go into a big bank and you tell them about Bitcoin, they're going to say, "Oh, that's a risk on asset." If they even call it an asset, they might just laugh, and you don't even have a conversation beyond that point. So when they look at Bitcoin, they see magic internet money, they see lack of innovation. They don't see anything important about Bitcoin. They see just risk. And that's fine. People have the right to feel that way. But the reality is in the numbers. And when if someone defaults on a Bitcoin loan, it is the easiest form of default in the world. So you can get that collateral and liquidate it within 10 minutes. So I mean, it's nothing else
Way,
compares to that. Real estate could
way easier than a house. Yeah.
Real estate could take up to 2 years. It could take up to 2 years to foreclose on a property, and I believe the median time is actually 18 months. So it's gonna take longer than a year to foreclose on a property, and right now in the United States, when you have a frozen real estate market, doesn't even matter if you have a foreclosure. You can fire sale it and still not sell it because interest rates are so high and we have an affordability crisis. So it's not liquid. Real estate is not liquid right now in the United States unless you're willing to take tremendous amounts of cuts on the value of the property. So that pristine collateral relationship needs to be understood by the lender. And that's one of the things we do. We are a lender ourselves, but we've also sourced other LP partners who look at this and say, you know what? I have a lending portfolio. I lend some money to the government. I lend some money to corporations. I lend some money to municipalities. I need to diversify my lending portfolio, and I need to be lending to these Bitcoiners because I look at Bitcoin as digital gold. And at People's Reserve, they're saying it's more than digital gold, it's pristine collateral. And you know what? Looking at Bitcoin and how it functions as collateral in the contract and how it protects the equity that I'm lending to this person, yeah, it makes a lot of sense. So there are people in the world who are waking up and saying, you know what? I don't consider lending to the government risk free. Yeah, I'm going to get my money back for sure, but I don't know what I'm going to be able to buy with it. But if I lend to this Bitcoiner over here and they walk away and I never hear from them again, well, I have Bitcoin and real estate, two assets that I feel comfortable holding in my portfolio. So I'd rather default into real estate and Bitcoin than default into a cash equivalent that is going to be handing me back printed dollars that God knows how much I'm going to be able to buy with it. At least if I default and have to wait 18 months over here, the value of the property is actually increasing because the abuse of the currency printer is not decreasing over time. It's getting worse and worse over time. So that my principal value is my purchasing power is more protected. There's less, the difference between nominal interest rates and real interest rates. Nominal rates are just the number on the screen. Real rates are in terms of purchasing power. So you'll get back the nominal rate that you were promised in the cash equivalent without a doubt. But if you can't buy more stuff with it and you can buy less goods and services, that's actually more risky than lending into a product that allows you to maintain a real rate of return. So that real rate is protected through real estate's value going up over time. And of course, Bitcoin's value going up significantly over time. So it's better to fold in. If something goes wrong, we don't anticipate anything to go wrong because we've set up things in our contracts. For instance, if you take out a Bitcoin powered mortgage and you lose your job, the first thing you're going to think is like, oh my God, like this is crazy. I might lose my home. Yeah, but in order to initiate the loan, let's say you borrow $1 million, you need to post $1 million of Bitcoin collateral. So that's the first rule. Whatever dollar number you borrow, you need to post at minimum an equal amount of Bitcoin. And that allows you to initialize the loan. What happens is if you lose your job, we allow you to pay your monthly payment from your collateral position. So you could, you posted $1 million and you borrowed $1 million, even if Bitcoin went down 50% in a couple of days because of some liquidation event, you would still have plenty of capital to be able to make payments month by month until you get back on your feet and find a new job and reestablish your cash flows so that you can make payments from your earnings rather than from your collateral. So we've taken every step we can to make sure that you don't go into default. But even if someone did default, you're now folding into that real estate. You're now folding into Bitcoin, and you're doing it in a way where it's over collateralized. It's actually less risky. And the light bulb is going off for LPs. Is it going off for the bankers? No. Is it going off for the guys who've been in TradFi the last 40 years and have done great and go to Martha's Vineyard and spend their weekends on the yachts? No, of course it's not. They don't want to change anything. Everything is going perfectly great for them. They don't understand that most people can't afford a home. They don't understand that most people don't have a $1,000 savings for a medical emergency. They don't understand that the real estate market is frozen because people cannot pay the monthly payments with interest rates at where they are now, which some people think interest rates are high right now. Historically, interest rates are at their average. For the last 3,000 years, the average interest rate is between 4 and 5%. Right now, the prime rate is 7.5%. So the prime rate is just slightly above the historical average, but people can't afford anything. There's too much debt in the economy. The market is frozen, and they don't see risk in that because they have just, ever since 71, if something goes wrong, they just print money at it. Print money, throw the money at it. Print money, it's too big to fail, right? So they don't understand the dynamic, and they don't really understand true risk reward in lending products. But thankfully, there are people in the world, there are LPs in the world who understand that dynamic. And those are the people that we bring together and that we source and who want to lend to Bitcoiners, because Bitcoiners in the future will be widely known as the true risk-free borrowers, and Bitcoin-powered financial products will be known as the true risk-free rate of return. And all of that starts with what we see happening here at People's Reserve, financial engineering for retail through the different products we've been working on and are excited to bring to market.
So is there a way, when you gave the example of like the $1 million, if you take a loan for $1 million, you need to put up $1 million worth of Bitcoin, and then your rate fluctuates based on Bitcoin's movement in fiat price. That's correct?
Right. So I skipped that.
Yeah.
So my apologies. I'll
Okay.
do quick on that. So if you post $1 million of Bitcoin collateral, we allow you to post additional collateral. And we're not sharing the thresholds right now. Everybody will be able to see that this summer when our contracts launch live, but we're not going to give away first market mover advantage. But there's certain thresholds, and as the value of Bitcoin increases over time, your interest rate will actually decrease. And vice versa. If the value of Bitcoin declines over time, your interest rate will increase. But remember, when you borrow with us, you're basically starting at the prime rate. So if you over collateralize with Bitcoin, you can get a prime minus interest rate. And then if the value of Bitcoin goes down, the thresholds are not ridiculously small. So you might get up to the high end of a mortgage rate today, going from 7.5% to 10%, which is definitely on the high end for a mortgage. But for alternative financing, that's not that bad, because if you look at the price to borrow against your Bitcoin in the industry right now, it ranges from the 10 to 16% range. So you're in the worst case scenario, you're on the very low end of what you're getting everywhere else in the marketplace for Bitcoin. And in the best case scenario, you're at prime minus, getting access to rates that nobody else in the world has access to, because only those who hold the pristine collateral are eligible to qualify for those rates.
And so you're effectively able to do this because you're very conservative with how you approach it. The loan is effectively way over collateralized. It's not, marginally. Is is it possible to do? I'm sure there's a name for this. It's either escaping me or I'm just unaware. But if you own a home and you want to, refinance and maybe work with a traditional lender for part of the home because you don't have enough Bitcoin to go to work with People's Reserve, but you want to maybe take part of the loan and collateralize with Bitcoin. Is there a way to like do something like that, or is it an all in with People's Reserve or nothing?
No, so I call them Bitcoin powered mortgages because people don't realize, like, it's not just a mortgage, right? You have refis, cash out refis, home
Mhm.
equity lines of credit. I mean, there are multiple financial products built around real estate, and we've integrated Bitcoin into each and every one of those products. So if you're looking to do a cash out refi, we have a solution for you. If you're looking to just do a simple refinance, we have a solution for you. Um, if you have home equity and you don't have Bitcoin and you want to pull out that home equity and turn it into Bitcoin, we have a solution for you. So obviously, there are going to be ways to where you can get financing without being able to put up a one-to-one Bitcoin collateral. But
Look,
the way most people think about it is, hey, I have no real estate and I have Bitcoin and I want to buy real estate, right? You have $100,000 in Bitcoin, you want to buy $1 million property. What do I do? Well, at People's Reserve, you do nothing. You haven't saved enough. You work harder. That's what you do. You work harder, you deliver more value to the economy, you increase your savings rate, you lower the amount of money you're spending, and you save as much as you can in Bitcoin, and you let Bitcoin do the hard work. And with a 10-year CAGR of 82%, it ain't going to take that long for that Bitcoin to be worth $1 million. Then you come to People's Reserve after you've done the responsible saving and let Bitcoin empower you, and you take out the $1 million loan. There is no free money, and there is no magic solution. We're coming up with financial products that make sense for the lender and the borrower, because both parties, this has to make sense for both parties. Traditional mortgages, you know who the exit liquidity is for the traditional mortgage market? The government. Traditional exit, banks write mortgages, they don't hold them on their books. They're way too risky. The real rate of return is negative. They don't want it on their book. They want to package it together, collect their fees, and sell it off to the government. And the government provides the exit liquidity for mortgages. We we are not too big to fail at People's Reserve. We hold these debts on our books because we believe in the loans that we're writing. So we're not packaging them together and selling them off and getting the risk off of our book. The risk stays on our book. Therefore, the structure of the contract must be beneficial to the lender and the borrower. In the existing traditional system, the contract is beneficial to the borrower, not the lender. Imagine lending somebody $1 million at 7.5%, and then they get the same payment for 30 years. Well, your payment might be 5 grand. Well, 10 years from now, you might be able to pick 5 grand up off of the street and then walk into the bank and make your mortgage payment. That's a risk for the lender. That's not a risk for the borrower. It's a risk for the lender. So it goes both ways in a Bitcoin economy, right? You can't just empower one side or the other. Both sides need to be protected. And I think at People's Reserve, we've done a really good job of using Bitcoin volatility and eliminating that risk, because that's the biggest risk in lending is the liquidation risk. I mean, I've had sleepless nights borrowing against my Bitcoin, so I know what it's like to be getting margin call emails and being told to put more Bitcoin in or you're going to lose it. But then not knowing if you put that Bitcoin in, the price still goes in, you lose even more Bitcoin than you originally thought was possible to lose. So we wanted to eliminate liquidation risk, and the way we eliminate liquidation risk is by our new innovative idea, which is to add adjustable interest rates to make up for the risk as the value of the collateral adjusts. So it's really just important to understand that our contracts are meant to benefit lender and borrower. And then with Bitcoin at the center of the contract as the pristine collateral, it becomes a win-win scenario. And the economic incentives become realigned. And that's the magic of Bitcoin. Bitcoin realigns incentives and makes finance make sense again. Whereas TradFi, it's still not making sense.
Yeah, that's so. I told you offline. I have this just default skepticism of any sort. I guess I'd say Bitcoin embedded fiat products. I got to hand it to you. I mean, the way you seem to be going about it makes a lot of sense. I was going to ask you, are you doing this because you're such a good guy, or because those are just the inherent incentives of Bitcoin, of having a scarce form of money is as pristine collateral, and so I think you seem to be a good guy, but I think it also makes a lot of sense that you say, we don't want to be in the business of liquidating Bitcoin real estate. We want to be in the business of or earning interest on as people are able to save enough to responsibly take out this loan, versus what we saw in 2008, where because there's obviously everything these days is government backed. They were able to give mortgages and sell it off to let someone else foot the bill when defaults were inevitably came. um Gosh, I have so many questions. One thing is, are there like parameters that you set when so you over collateralize your loan, you get X% minus prime, based on whatever the LTV is, I guess. Are there are there like boundaries insofar as like what the rate can float to and up to and down to, or is that contractually agreed upon, or could it go as low as almost 0% up to as high as credit card rates and beyond?
Right. Yeah, no, fantastic question. So there is a limit on the downside. So you can only get to the point where you're 300% over collateralized. That is the maximum amount of points that we allow you to buy. So if you're borrowing a million and you've posted 3 million of collateral, or maybe you posted 1 million of collateral and Bitcoin goes up from 100,000 to 300,000, and that will benefit you. You will actually see your interest rate shrink as the value of Bitcoin increases over time. But once it gets to that 300% ratio, you cannot shave any more points off. But what we allow you to do is to take back your collateral so that you can put it in self custody. You don't have, if that collateral isn't locked. And then there's other options you can have if you want to make prepayment, or different people want to do different things. We pretty much have worked in any type of option you can. And then on the downside, it goes down to the price of Bitcoin going zero. So if the price of Bitcoin goes to zero, that would be the maximum amount of points added to your start rate.
Okay.
So on the upside, it's limited at 300. On the downside, Bitcoin can go to zero. But of
Okay.
course, I don't think anybody believes Bitcoin is going to go. We can go
Yeah.
down 50% in 5 days because of some liquidation event, but it's not going to go down 50% in 5 years. We have an
Yeah.
82% 10-year CAGR. So that intraday volatility is really that volatility risk is mitigated by the variable rate. And at some points in time, like during a bear market, your rate might go up a little bit, but then during bull markets, you're going to find that your monthly mortgage payment keeps getting lower and lower, and it's going to be like, this is great, like I'm used to this fixed rate payment based on my promise. And now I have a variable rate, and people are like, "Oh, variable rate." Yeah, variable rates, there is more risk with variable rates, right? Because your monthly payment could go up. But with Bitcoin as your pristine collateral over time, based on historical performance through its engineered design, the rate is going to go down for you. And you're going to be more and more empowered by the collateral that you posted, making life more affordable. And that's my calling. So people say, why am I doing this? Because I believe as an entrepreneur, I'm solving a really important problem. And even if anybody else doesn't think that, I will be our own customer. CJ will be a great customer of People's Reserve. I will use my own product because I built it to solve my problem. It just turns out that other Bitcoiners, they have the same problem I have. So they need this solution. And delivering this solution will increase their quality of life and standard of living by helping to lower the amount of cash flow required to make their mortgage payment. And it'll allow them to keep Bitcoin to empower future generations. And I think that's super important. I want Bitcoin kids to come up and be leaders and make decisions. Surely the world would be in a better place if Bitcoiners made a few more of the decisions rather than these fiat maxis. So being able to help perpetuate that reality through our financial products and services is really important. And the other thing is that this goes back to me saying that we are relationship maxis. People have only really heard me talk about People's Reserve, Bitcoin powered mortgages, and Bitcoin bonds. We've been building for 4 years. Do you guys really think that we've only built two products? We are a one-stop shop that is going to help you manage the most important assets that you have, which is life, savings, and your home. So when it comes to life, savings, and home, when it comes to health insurance and life insurance, when it comes to savings technology and being powered by your savings, by able to unlock that trapped equity, when it comes to your home and how you're able to access your home and how you're able to get financing for your home, that's where you're going to come. You're going to come to People's Reserve because we've designed products to empower you, not products to extract value from you. And over the long term, even though our interest rates are lower, we could write the loans at a higher rate because that's what everybody else in the market is doing. It doesn't matter. Every one of those customers will see that People's Reserve is a Bitcoin maxi team building for Bitcoin maxis with a Bitcoin mindset. And that Bitcoin mindset will steal the marketplace. And I believe that People's Reserve will be able to facilitate a marketplace based on Bitcoin ethics and Bitcoin morality that will so far out-deliver value relative to these value extractions things that the pure sum of the number of our customers will make up for charging a lower interest rate and being the innovator and the trendsetter who officially recognizes Bitcoin as the pristine collateral. And capturing that first market mover advantage will solidify People's Reserve's position in the marketplace for hopefully generations to come, to continue to empower Bitcoiners who have been responsible savers and move the world towards that Bitcoin standard where Bitcoiners can start to influence culture and society so that we can see all of us have a better quality of life and standard of living, not just through our purchasing power, but also through our relationships with other human beings who we can now treat better since we're not fighting a system that's extracting value from us.
Well, I commend you for your approach to business. It sounds a lot like what we do at the Bitcoin Way. We've got great relationships with our clients, and the point is really to help people live a life of self sovereignty and to yeah to increase their capacity for freedom. Uh, so I told you offline. I had a friend who asked me yesterday. He's like, "Hey, have you heard about the CJ guy?" And I was like, "Dude, I'm talking to him tomorrow." So here we are. Um, One of the things he was asking was because he's very interested in your product, specifically for well, he's looking to build a home. I guess I could see him maybe refinancing or something like that too in his existing. Okay, my understanding is you do construction loans. Is that correct? Or that
Yes,
okay?
there's a lot of nuance to
Yeah,
construction loans. There's a lot of additional risks um, because unfortunately, those homes always don't get built.
yeah,
And there are ways to mitigate that risk by financing the loan through different phases. So I can say this. We are looking at creating a solution for construction loans. We've had quite a few inquiries about construction loans. But when
mhm,
we launch this summer live in the United States, we will not be offering construction loans. But in the background, I can tell you this is a roadmap item. And I think eventually we will complete due diligence and do the financial engineering necessary in order to facilitate a construction loan. It just requires more due diligence and financial engineering
yeah.
before we can take the product live because there's a lot of extra moving parts relative to a one-time purchase and finance.
Definitely. No, yeah, I understand that. One of his questions too was, how often can you post additional collateral in the form of Bitcoin, and how frequently are rates reassessed based on that, or based on fluctuations in Bitcoin's fiat denominated price?
Yeah, great question because most adjustable rates work over a certain time period, and we don't do that. The rate could
Mhm.
adjust daily.
Okay.
The rate will adjust it. Now the thresholds are wide enough that it most likely will not adjust daily. But if you get a big move in the price of Bitcoin of greater than 10%, then there will be an adjustment. And the interest is accrued on a daily basis. So one day you might be paying a lower rate, one day you might be paying a higher rate. But you can add or take away your collateral at any time with no penalty. So
And
there
it
are no
happens in real time. That readjustment happens effectively in real time, like on the day that it posts or what have you.
correct. So
And then you add that, and at the end of the month or whenever the payment is due, I assume still a monthly payment that people are paying. It's just you've got a calculator basically on the back end that's been adding this together and then says, "Here's what your monthly payment is for
yeah,
this month."
and it's a regular amortization schedule. So the value of your principal payment will basically stay the same, and the value of your interest payment will change because of the rate adjustment if there is one. The other thing is that if you deposit your collateral, the rate will not change that day. It will change the next day. So that's the one
Okay.
caveat. That day will be amortized at the rate at which you started the day, and then the very next day your rate will adjust and that day will be amortized at the new rate.
Okay. My understanding of a typical mortgage schedule, though, is lots of interest paid in the early years, much more the principal paid in the later years. Does that mean that earlier on in the loan's life cycle, you're paying your rate or your payments may fluctuate more, or is somehow the schedule a bit unique to? Are you offering like a different approach to how you run your
No,
mortgage
this you're
schedule?
absolutely right. It's a
Yeah.
standardized amortization schedule where the bulk of payments are interest in the beginning and the bulk of payments are principal at the end.
Right.
And one thing we allow you to do without penalty is to make principal payments. So you are
Okay.
able to make early principal payments, which is a great way to save on interest cost over a life of a loan. I mean, just one principal payment every 6 months, depending on how much, if you borrow $1 million, it could save you a couple $100,000 over the life of a loan. So
Hmm.
definitely, if you're borrowing, you should be considering if you have if you get a bonus at work or something like that, making a principal payment is a big deal on saving an interest over the life of a loan. But it's a standard amortization. So in the beginning, yes, your payment could fluctuate more if the price of Bitcoin is fluctuating heavily because the vast majority of the payment will go towards interest rather than principal.
Okay. Yeah, that makes sense. Man, this hour has flown, man. Curious if yeah, I imagine this is before you said you've been working on this for 4 years, and it sounds like obviously multiple products, not just we're talking a lot about the mortgage. I think it's an easier example for probably many people to understand. What's the regulatory environment been like for you building this? And do you have any concerns about how it may change? Or, I know like SAB 121, like a lot of the things that I think had concerned people, a few years ago, that's been repealed. Just tell me what this process has been like trying to work through all of it. I can't imagine it was completely simple.
So yeah, in the very beginning, it was we started building this business when there was a war on crypto. So in the very beginning, it was just keep your mouth shut and keep your head down. You didn't see me talking about this until we had a change in administration and a shift in the way that the regulators and governments were looking at Bitcoin and the space as a whole. So after that switched in administration was a big deal for People's Reserve because now you don't have to worry about defending yourself. But one thing I'd like to add is that there's kind of a big misunderstanding when it comes to regulation. And I think that misunderstanding comes from like all of crypto, right? Like all of crypto, like Bitcoin and crypto are two different things. So everything that happened with crypto in the previous cycles really put a stain on what regulations are effective and how you defined a security versus something else, and it created a lot of gray areas, um, and rightfully so. Because if you look back on that, and a lot of crypto people don't like to hear this, but if you look back on that, the majority of the time, with very few exceptions, the government was actually right. Most 99% of crypto projects disappeared. A large percent of crypto projects were scams. So that that regulation, if it should have worked, but people were saying that it wasn't valid, blah 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 blah. You have to go to court, you have to do these things, and that created all of the animosity in the industry. Now, a lot of that animosity has thankfully become no longer an issue because the new administration coming out and making certain statements to clarify some of those gray areas are really important for Bitcoin as a commodity, for how Bitcoin is used in hard money lending. And then when it comes to lending, the laws are very clear. There's no questions about lending laws. There's no confusion between regulations in different states when it comes to standardized mortgage versus non-qualified mortgages. It's very clear how you have to structure a non-qualified mortgage. It's very clear that you can't take a non-qualified mortgage, package it together with other non-qualified mortgages, and then sell it off into a non-qualified mortgage-backed security, right? The standardization of mortgages was really designed for mortgage-backed security products, so residential mortgage-backed securities and commercial mortgage-backed securities. And then the lending laws are built around theirs. But when it comes to hard money lending and non-qualified mortgages, there there's nothing really there to block. There are some states like Florida and Texas and Illinois that have certain laws in place as a result of what happened in 2008 to take extra protections for buyers of real estate. So, obligations to make sure people that can pay back the loan. You can't write a loan to somebody if you know they can't pay it back. Well, at People's Reserve, the person is posting $1 million of Bitcoin collateral and borrowing $1 million. They can definitely pay it back. They don't have the problem. So a lot of the laws in place are kind of just the common sense laws that came to be from the fallout in 2008, which apply directly to our business model in a very clear and succinct way. So there haven't really been that many regulatory hurdles that we've had to face. There, because of the different states having different laws when it comes to real estate and lending, that's created some extra time and energy and work to make sure that we are positioned, like, not our contracts are different in every state. So just to give you an idea, like, we couldn't just create one contract and use it wherever we want. We had to create 48 different contracts, and we can't even create a contract in New York or Washington. They still have some things they have to iron out with their lending laws. But in all the other states, the lending laws are very clear. Mortgage laws are very clear. Non-qualified mortgage laws are very clear. Hard money lending laws are very clear. And they're all very helpful to have. But having to draft 48 different versions of a contract to fit into each state's certain regulatory framework, yeah, absolutely. That took a lot of extra time and energy to make that happen. Whereas in a standardized mortgage works the same in all 50 states, no problem. So you can tell the difference. Like, that was the hiccup. The hiccup was it's a non-qualified mortgage. It's not standardized. Therefore, each state has a separate set of rules and regulations you have to follow for hard money lending and a non-qualified mortgage. And some states like Texas and Florida, they still treat a non-qualified mortgage as a credit product. So additional steps that needed to be taken to make sure that those regulations are followed. And a lot of those regulations are designed to protect the borrower rather than the lender, right? They're designed so that the lender follows the right infrastructure setup and the right lending policy, but really they're designed so the borrower doesn't get burned. And at People's Reserve, we start from the position of empowering the borrower. So a lot of these regulations that we came across was like, wow, this is great. These politicians actually, you know what? They can make some good laws. They can make some smart laws that make sense every once in a while because they want you to make sure that you have a debt to income ratio that allows you to pay back the debt. They want to make sure that you're not getting charged interest rates above, in Florida, 18%. If you charge above 18% in Florida on a residential loan, that's usury. The lender is breaking the law. So there's these small thresholds and nuances between each state, which made constructing contracts for each state more difficult than it would have been if it were a standardized process. But all the rules and regulations make perfect sense. So it's just a matter of spending the extra time and money to be prepared to do business in those states the right way, according to their regulations, that took the extra time.
Yeah, man, I would not want to be on your legal team, but I imagine you paid them well.
Yeah. People ask
Uh,
me all the time, "What do you do?" And I joke about this with my wife, and she's like, "Well, you're a Bitcoiner. You're I don't know. You're weird. I don't know what you do." I'm like, "I'm basically a lawyer." I'm literally, I mean, like, I have to do lawyer work so that when I give it to the lawyers, I don't have to pay them $5,000 because I already did 75% of it, and they just do the
yeah,
other 25% that I don't know because I'm not a lawyer. So yeah, I mean, like, I'm basically a lawyer, and I've had to deal with that for the last 4 years. It's been a wild ride, but I've learned a lot, and I couldn't
yeah,
be more excited because these products hit the market in a regulated way. They're going to be able to scale like we've never seen before.
yeah, yeah. Well, fantastic. Well, hey, I've got one last question for you, but before I get to that, I do want to just give you an opportunity. Is there anything we haven't hit on with People's Reserve that you wanted to highlight, share, touch on, pitch to anyone?
Yeah, I mean, there are a couple things. So I think now's probably a good time to start talking about maybe some of the other stuff that we do that I haven't mentioned before on any other podcast or
Yeah.
publicly. And one thing People's Reserve has is the PRUSD stablecoin. So our PRUSD stablecoin is a United States based stablecoin backed by cash and cash equivalents at a 1-to-1 ratio. But we have some very exciting things built on top of our stablecoin that the marketplace has never seen before that is going to help create incentives around stablecoins that don't exist today in the stablecoin market. So that's something to definitely keep an eye out. We have innovation with financially engineered products, but also with our stablecoin, which again is a 1-to-1 reserve backed stablecoin backed by cash and cash equivalents designed to conform to the eventual stablecoin bill that will be passed here in the United States. I know it got the Genius Act got denied recently, but eventually it will go there. I've been talking to people in high up positions like Byron Donalds, who sit on the Financial Services Committee. There will be a stablecoin bill eventually. So we've built to conform to that eventual stablecoin, but the mechanisms of our stablecoin and how we plug it into decentralized finance play a really big role on some of the incentives that are created behind the coin that don't exist in any other stablecoin. Another thing that we have coming down the line for people is the Bitcoin bond. And the Bitcoin bond is it's so underappreciated. Small and medium-sized businesses want Bitcoin. I've talked to thousands of them. They want Bitcoin on their balance sheet, but they can't do it. Because if you have a small and medium-sized business, and let's say for the quarter your business made $500,000, most small and medium-sized businesses are going to take that $500,000 of profit and reinvest it into the company. You're going to buy more equipment. You're going to expand into a new zone. You're going to hire a new employee. That's the whole idea, right? Grow the business and then eventually get it to a point where you can sell it and capture a premium on the business that you've put your life and energy into. So they want to take those profits and build the business and expand the business, and then that's the whole goal of it. But if they put that 500,000 in Bitcoin, now they have to sell that Bitcoin. They have a tax obligation if there's a capital gain, and then they have to get rid of the Bitcoin off of their balance sheet if they want to hire an employee or if they have to buy new equipment or if they run into an emergency. So it doesn't make a lot of sense for small and medium-sized businesses to start putting Bitcoin on their balance sheet because it's trapped equity. It is literally an asset that is just trapped on your balance sheet. You can't tap into that equity without creating a liability. And if you want to give up ownership, you're now creating tax liability. Well, our Bitcoin bond is a principal protected note, and we offer it in the form of a vault. And I think it's going to be a game changer for small and medium-sized businesses' adoption of Bitcoin. And I'll tell you why. Because we structure the note in a way that it's a 5-year note, and over the 5 years, the portion of the note that is allocated to cash equivalents matures at the principal value of the investment. So if you're that small business and you put $500,000 in this Bitcoin bond, after 5 years, you're going to have $500,000 protected by the U.S. Treasury debt note, backed by the full faith and credit of the U.S. government and the power of their printer. Right? They're going to print it and they're going to give it to you. So you're going to keep that nominal value. But the portion that wasn't put into that, and at 4.5%, it's an 80-20 split. So out of that, $100,000 would go into Bitcoin. And then at 82% CAGR over the 5 years, what happens is Bitcoin becomes the form of yield, and the performance of Bitcoin is the yield on the note. So the cash equivalents produce the principal amount, and then the performance of Bitcoin produces the yield. So if Bitcoin goes down 50%, the note pays 2% APY. If Bitcoin price stays the same over those 5 years, it pays 4%. If Bitcoin does what you and I know it was engineered and strategically designed to do, you can get yields of up to 20 to 40% APY with principal protection. So we're talking about 100% downside risk with infinite upside potential. On top of that, at People's Reserve, we allow you to take the Bitcoin bond and post it as pristine collateral. So if you're a business who wants exposure to Bitcoin but also needs access to the equity value of the asset side of their balance sheet, you can buy the $500,000 of Bitcoin bond. And then if you need to hire an employee or you need to buy more equipment or an emergency pops up in your business, you can post the Bitcoin bond as collateral, borrow against it at a very competitive interest rate, especially relative to the rest of the market, and tap into that trapped equity, fix the problem in your business or expand the business, and then use the revenues of the business to pay down the debt. At the end of it, you still have your Bitcoin bond and you have your new employee and you fixed your problem. So I'm really excited about Bitcoin bonds and what we call our principal protected vaults, because I believe it's going to open the door for small and medium-sized businesses to realistically put large amounts of Bitcoin exposure on their balance sheet, because they can do it in a way where the equity isn't trapped and they can access that equity without creating a tax obligation.
Man, you thought of everything.
I have 4 years. I have 4 years.
Yeah. Fair. So when do things go live? Where should people go? Maybe just I want to make sure that if people are interested in this stuff, they
Yeah,
know
absolutely.
what
So
they're
the
looking
best
for.
place to go is to peoplesreserve.com and sign up for our newsletter. Our second newsletter just went out last Wednesday or yesterday, so it's relatively new. But you definitely want to go to peoplesreserve.com, put in your email, follow us on the newsletter. That's where you're going to get all of the updates and all of the educational materials. But we're going to go live this summer on what we call We the People Day, because we say we the people. We want to serve we the people. So on We the People Day here in the United States, July 4th of this year, you definitely want to be looking at People's Reserve and getting in a position to be ready to take advantage of these products and services that we've built for you over the last 4 years.
Terrific. Well, hey, I almost forgot the last question. If you thought of one since I told you at the beginning, what is an unpopular opinion you have, and bonus points if you offend some Bitcoiners with it?
Yeah, definitely it's that, dollars are the best Bitcoin L2. So, Lightning is a fantastic Bitcoin L2, except when I pay with Lightning, I no longer own the Bitcoin I paid with. But borrowed dollars against my Bitcoin collateral are the best way to spend my Bitcoin. Borrowed dollars are accepted all over the world. Uh, it's a universal form of payment, and if you're paying in cash, and oh, that's another thing. People's Reserve has an amazing debit card, and on the roadmap, we're hoping to transform that actually into a credit card. So we have all of these ways that you're going to be able to tap into your Bitcoin equity and spend that equity into the economy without giving up ownership of your Bitcoin. That's what makes dollars the best Bitcoin L2. It's a way to empower yourself by reducing the burden of debt over time. There's no other asset in the world that you can borrow against where the growth and the value of the asset itself will so far outpace the APR interest rate you're borrowing at that the burden of the debt literally becomes nothing over time. And to leverage the power of that dynamic, you need to spend your Bitcoin with borrowed dollars. So I'm sure some Bitcoiners are upset about that, especially the circular economy Bitcoiners, which I don't think there's anything wrong with that. It's a free market. There's a time for Lightning. There's a time for borrowed dollars. I'm a user of both. And the free market will decide the best way. But if you want to earn Bitcoin yield, which is the reduced burden of debt over time with no counterparty risk, the best way to do it is with borrowed dollars.
CJ, you are a brave soul for bringing that as your unpopular opinion. I'll be looking forward to seeing the comments. Man, hey, this has been enjoyable. Thank you so much, and best wishes to you. You got a big launch coming up, so I wish you lots of luck on this. I know it's been a lot of building over the last 4 years, and probably a lot of uncertain times and difficulties and hurdles along the way. I can imagine, especially in the previous administration. So, thank you so much for being here, brother.
Thank you so much. And I look forward to coming back soon, especially after we're live.
Sounds great, man. You take care. And that's a wrap. Again, I hope you enjoyed my conversation with CJ. He's doing some incredible things. It seems like they've truly thought of everything. So go check out People's Reserve if you feel so inclined and are interested. And of course, do me a huge favor. If you're enjoying the show, give us a like, subscribe to the channel, share it with someone, leave a comment. We would really appreciate it. It makes it much easier for people to find us. And if you need help with Bitcoin in proper 100% self-custody, doing it the right way the first time, go to thebitcoinway.com/podcast. You can schedule a free 30-minute consultation with a member of our team. We'll help you get set up in full self-custody, but we also help with online privacy, setting up privacy phones with a Plan B residency option, so everything you need for your self-sovereignty needs. And as always, stay safe, stay sovereign, and remember, the yield on Bitcoin is freedom.